Good morning, traders. Welcome to this video on the euro dollar and pound dollar. My name is Chris Forsick from Elite Currency. We're going to take a look at the euro dollar and pound dollar in the next 2 days. First of all, this euro dollar daily chart. What is happening in that right now is price is falling, and that could indicate a bearish bounce. We were already talking about the fact that an ABC is completed here, and there could easily be an ABC here of a bigger red A, B, C. So has the red wave B been finished now that price is falling? It's not clear yet. We have to see a break below 117.50. Why? Because of the following support zone on the 4-hour chart. You can see clear support zone here with the tops and bottoms, here top, here bottom, but also the long-term moving averages and this zone that went sideways here. All of that a factor in support. So easily price could bounce between 117.50 and 118 and move up. So if that happens, this could be a red ABC here like this, and of a bigger 1, 2, 3, wave 4, and up for wave 5. And that blue wave 5 could actually complete the final wave C of this ABC, and then also complete thereby the red B. And here's a red A, and then we should see a 5 wave down, 1, 2, 3, 4, 5, 5 wave for red C to complete a bigger wave 4. And then I move up again for wave 5. All right. So thinking a lot and far in advance, that's not necessarily needed, but just laying out what I expect from this path of price, and that the most likely path, at least at this moment. We put a fib on the wave 3 because if we expect a wave 4, that's very important. And the main target would be the 38.2 fib, which is at around 115, which is also a psychological round level. Now, having such a choppy, corrective, lengthy wave 4 is absolutely normal and typical and usual for such a wave 4. And also the main fib is a 38.2 fib. So all of that will be very, very normal for wave 4. And we have also the 144 EMA right there at the 38. All of that providing very nice confluence for a bounce up and the end of the wave 4 and the start of the wave 5. All of that will be out of the window only if price really starts to break below the 61.8 fib, below 112.50. In that case, it is not looking like a typical wave 4. And that would be invalidating, or not fully invalidating, but making it very unlikely. Even a break below the 50 would be a question mark about the bullish outlook. That makes it already quite less likely, but not fully not fully impossible, but not that likely anymore. There are also some long-term moving averages there at the 50 fib providing support. So that's the long term. Looking at the 4-hour chart though, again, what we're seeing here is the potential for price to bounce at 117.50, 118 and head over to, well, about 119.25, 119, 119.25, even 119.70. We could put a fib on this swing, and we're looking for the 78.6 fib at 119.25 or the 88.6 fib at 119.65 for the moment. What if price breaks above that? Well, I certainly wouldn't rule out a larger push above 120, but anything below 120 is still heavy resistance, and I'm expecting a bearish bounce at these zones. Only after a bearish bounce and after a bullish break above 120 could we expect some more upside, maybe to a target, for instance, at 121.50. So that's all my thoughts about the euro dollar. Before I look at the pound dollar, I wanted to let you know about our ongoing webinars. Check out Research and Education and Webinars. Really a lot of good info here. You can expect on a weekly and monthly basis. So a lot of good stuff there. But also our education and our blog with our daily analysis and news. Also, of course, our sponsorships when you look at providers or services for trading EAs with no upfront cost, for instance. It's available with 3 of our EAs, in fact. So, or all 4 of our EAs at this moment. So very exciting stuff there for you to discover and find out more information. All right, let's take a look at the pound USD. On Wednesday, we were saying, okay, if we get a breakout candle, it should make a move up to 131.75, and we did get a breakout candle. This is the breakout candle. That's a good breakout candle. And indeed, price continuing for about 140 pips after that, right smack into that 131.75. But on the other hand, I also right away mentioned that if it gets into the zone, it would be a great way to look for a bearish bounce and reversal because it's such a resistance zone and could be an interesting reversal trade setup. And that's what happened as well. Price falling almost 170 pips back to 130 round level. So both up and down trading ideas, in my view, working out nicely as far as I can see at least. So what is the bigger picture? For me, the pound is a little bit less clear, to be honest. Maybe it's the Brexit uncertainty and volatility that is making it, for me at least, more difficult to read. I don't know if someone might see it very clearly, but I'm going to be honest here, as I always do, of course. If I'm not sure, I always give my best probability, but sometimes things are not clear or have a small edge, and I'm going to mention that. I don't stick to always 100% view on things. Sometimes things are not that clear, right? That's part of trading, and if it's not clear, it's okay, and it's okay to stay out. We have a choice which currency pairs to trade, which instruments to trade, which markets to look at, which trades to trade, right? And or not to trade. And not trading is maybe just as important, or maybe even more so. So with the pound USD, I personally just don't see anything at this moment. I was leaning towards a bullish ABC. Whether that wave C is finished, maybe because it entered, the potential wave 1-2 here. Let's take a look at the hourly chart to see that. Maybe this is a wave 1-2, and this is a wave 3, and this is a deep wave 4. But it's a big maybe. If we put a fib from here to here, you can see it went all the way down to the 61.8 fib, which is unusual and untypical for wave 4, but theoretically could still happen. A bit unusual though, but maybe an ABC completed within that wave 4, and we got a big bounce here. I personally, now that price has already bounced at 130, I think it's too late to chase it here. I would look for a break above the 21A, look for a pullback into the 21A zone, maybe a head and shoulders like this, and then a bounce. And look for either the bounce of the red shoulder or the break after the shoulder here, basically, for breakout and a move higher to, for instance, 132.50, which is the minus 272 target, or even 133, which is the WIS8 level there for a bullish bounce. Of course, a pin bar on the 4-hour chart wouldn't hurt. That would help the bulls regain control, and it could be used for bounce up. So that's my thoughts. Of course, if it goes below 129.50, then it's certainly not looking bullish anymore at that point. And a break below 129.50 could be a bearish breakout, not only below the long-term moving averages, but also below this trend line and support trend line. And we might be looking at a bigger push down. Specifically, if we get a daily candle close below 129.25, then in that case, this could be A, B, and we might be looking at the start of wave C and the end of wave B if we get a daily candle close below 129.25. All right, folks, that's it for now. Thank you. Check out our Elite Currency website for more info, and see you on Wednesday with the next update of the usual euro dollar and pound dollar. Cheers.